Okay, I'm assuming we're live. I didn't notice the go live your live thing flash on the screen, but I'm pretty sure we're there. Anyway, so I'm going to start off with Goldman Sachs put out a note at the end of the day yesterday, and the headline was unprecedented, and that's pretty much sums it up. That's a quick review. I have it in my note that went out. Okay, thanks, Rick. Uh, I had in my note that went out, and basically, I think most of us know that we were up, whatever, 1.5-ish% at the peak of the day and closed down 1 point whatever percent. NASDAQ, the QQQ was almost a 5% top to bottom. Um, Many research notes came out saying this happened twice. COVID, something like this, this degree of magnitude happened twice. COVID and Tariff Liberation Day. That's it. So yesterday was one of those days. However, and here's the interesting part, and then we'll get to like the church of what's happening now and how we make money today. The interesting part is that for COVID and for Liberation Day, there was a clear trigger catalyst. There was, it wasn't ambiguous what happened. We all know what happened. Yesterday, nobody knows what happens. Nomura doesn't know. Goldman Sachs doesn't know, et cetera, et cetera. As best I can piece together, looking at different research notes and looking at the chart and doing like a forensic autopsy, so to speak, on my P&L as well as on the charts. It was one of those perfect storm kind of, um, or imperfect storm kind of multifactorial um, matters, including um, profit taking on the NVIDIA and the whole NVIDIA volatility dynamics, the put call, skew, and all that kind of set something up. Um, Additionally, we had a leveraged ETF and VIX um, related hedging, buying and selling. And as VIX went up, that that kind of caused a crazy VIX spikes, which cascaded into a relatively thin gamma environment below us. So basically, there was no support below. 6710 or 20-ish was the 50-day moving average. And as we broke through levels, CTAs, trend following funds, short term, long term, short, medium, and long term funds, broadly speaking, broad buckets, started accelerating their selling. Um, on top of that, there were some large put buys, like $4 billion worth of puts in the zero DTE, which looked to me like weaponized gamma and very systematic programmatic targeting, buying um, puts at TWAP, time weighted moving average prices, and just moving them down. And I had a list of like 7 things. So there was a lot of stuff going on. If you read Nissim Taleb's Anti-Fragile, the market is very not anti-fragile now. There's a web of interconnectivity here, and it's the old butterfly wing causing a storm, in causing a typhoon in Japan from a butterfly fluttering its wing in the Amazon jungle, kind of thing. So that should give you a lot of confidence walking into the day today. So, with all that said, last but I think not least, and this is one of the old IMHO things, we were looking okay-ish until around 10:30. You know what happened at 10:30? Lisa Cook, the Fed governor who Trump tried to fire and who Trump is suing, came out with a statement basically resurrecting the private credit market is in bad shape and that the stock market fundamentals, whatever, don't support this market level. So I think it was revenge of Lisa Cook yesterday. Personal opinion. I mean, you could time it. I mean, here it is. Here's Lisa Cook starts talking. We start going down. Hedges start going in. Um, Gamma levels start reversing, and then we just cascade. And then everything else piles on. So, said Governor Lisa Cook is speaking today at 11 o'clock. Again, for what it's worth. So, I'm certainly marking that on my mental calendar. In the morning, just FYI, we had the more dovish governors speaking, and you'll notice, I think we had one at 7 or 7:30. We just had Williams, I think it was. So we have some kind of exhale from what they said. So that's where we are going into the day, along with the YLD family of funds selling today. They're selling at the money calls in QQQ, in NDX, in SPX, and in RUT, as well as in single name stocks like their NVDY fund or whatever it is that they have. Um, 30 DTE next month's expiration, which is typically a tailwind. I mean, a headwind, like we really need headwinds, right? Which is typically a headwind. Yesterday's QYLD wasn't a tailwind. Why? Because when they started buying at 2 o'clock, we were already past the point of no return. They started buying at 2 o'clock here, and you see we got a little bit of a reprieve, whatever, but we're already past the point of no return. That was your GTFO, if you were long, and reload signal, which I took partially, but not nearly as much as I should have. Okay, so here we are. So what now? And for that, let's go. Let me just look at some of the levels here. So we closed yesterday right around here. So that's an obvious stall area. Buyers, in theory, should show up. We also have some gamma levels right around here, which I'll show you in a minute. I'm not sure. I think this is labeled wrong. I'm gonna have to. I had trouble labeling my trading view strings this morning. The commas weren't in the right place and the words weren't in the right order. So the lines are in the right place, but I have to double check all that. But wanted to get on here, so actually quadruple check at this point. Um, I'm not sure where that line came from. That label looks wrong. Oh, I know what that is. That was the bottom of my chop zone. So I gave today's chop zone 6650, 6650 to 6615, 6550 to 6515, all the way up here. And with the expected move of 75, like really, there's not much else to hang your hat on. Now, there are some things along the way. We have a pivot right around here at 6665. I'll show you what that is in a minute. That's a pretty decent size positive gamma level there, so that should act as support or sticky pulling us down if we are close to it later in the day. We have another sticky zone right here where we are in the 75, 85 area. Once we cleared towards 6,600 round number, a little bit below that, then we have a ladder pulling us up. We have some long calls up there, which right now are very low delta, aren't going to matter much. But if we get close enough, they could. Actually, we might be close enough now where they matter. All right, what are you talking about, Doc? All right, let me show you. So here's, whoops, okay, take two. So here's the gamma map for today. Oh, wait, I had it all backwards. Great, I did my whole thing backwards. It's not going to change much. Okay. Oh, I was looking at the other one. I was looking at the other one. Yeah, I think I had the whole thing backwards. Great. Levels are the same, only the action is going to be different. So 6650, 6550, if this breaks, down we go. Nothing really to support us other than the 6525. We have a little bit of market maker long. We have a butterfly looking structure right here. Looks like somebody bought a 50, 25, 500, 25 wide. So this is our first thing. Here's that sticky zone that we're in right now. Okay, no, the levels are the same. Okay, here's that sticky zone that we're in right now, positive gamma. We kind of have to fight our way through this up to the 6,600 round number. Then we have another fight through the 6615, top of the chop zone, roughly the top of the expected move. And just making a guest appearance, we have last Friday to this Friday. This draws the expected move Friday to Friday. So last Friday's bottom of the expected move was right around the 6615. So making a special guest appearance, could we get there and like end up right inside that zone? I don't know, but that's just another data point. Okay, so that's here. If by some miracle we get over 6620, and yesterday it was a miracle, so why not have another one today? We have this acceleration zone up towards 6,700, like in theory. Okay, also in theory, though, whatever's here on the customer long side is going to decay. I mean, this is more than 100 points away. So really, our main area of focus right now is 6645 area customer long calls, but this decays and charms down and pushes us down. And 6620, if we get up there, we have 6600 to 6625. If we get up there, another zone, we're not that far away. And then we kind of have to slog through this area between 6575-ish, where we are now, and the round number. I didn't get a chance to review it with Binkus yesterday at the end of the day, and he if he's awake at 9:30, that's kind of unusual, and so that's where we're at. I'm going to go back to the charts for a minute and let Julie speak, and I'm just going to have to do the bare bones E-mini because I couldn't get that string to even work at all. At least this one I got to work somewhat. That one I couldn't get to work at all. And I'll have to somehow get that done and get that out to everybody. All right, can I get that to, yeah. Okay, go ahead. What do you got?
Good morning, everybody. So let me adjust my chart here shortly. Okay, so things are looking, I think, a little bit better depending on what side of the aisle you're on. I'm bullish in that sense, but I think we are starting to find a little bit of a bottom here. Whether this is the long-term bottom, who knows? But I am seeing support by the way I read the chart. If we can hold over 6605, I think we have a good move up to 6650. So good, 40, 50 point move. But we have.
Today?
I don't read my system doesn't tell me implied
Time
move
frame,
or
right?
kind of
Right.
movement.
Right.
It's just what I can see, and I like to prepare for anything. And
Gotcha.
I think that kind of comes to my advantage because then it helps me hold moves instead of telling myself, no, that's as much as it can go today.
Gotcha.
So yeah, so from 6605, let's say, to 6655, I think that's a good move, but we have to hold above that 05 first. When I say hold, what do I mean? I'm looking at a 5-minute close, a 15-minute close. Obviously, if you get an hour close, then you're looking even better. The higher the time frame the close, the better in my book. If we can, I'm expecting kind of a peak there at the 55. If we can hold above the 55, I could see an even bigger move. Call it to
So that
710.
55, by the way, roughly corresponds to that same bottom of the expected move from last week level that I was pointing out on the gamma thing. So there's some sort of interest all the way up there if we get there.
Okay. Is there an interest at 720?
At 720 all the way up here?
Yeah.
Yeah, 6,700, sure.
Okay. That's what I'm looking at next. After that, obviously, these are big ifs. I don't think the market likes to move in big moves back to back. At least not as big as this first move that we got yesterday. But I think anything's possible in this market. So I like to leave an open table for that. I think if we can't hold 6605, I think a good target would be that what is that 6530 area. That might be the range for today. If we break below 6530,
I'm trying to change my time frame here so people could see what's below 6530. Okay. So 65. Okay. So it looks like I'm just eyeballing here. So we broke the the October low, everybody, and we kind of reclaimed it. And that's roughly that same area that we're battling, the 60. So 6530 is right below that. Is okay.
yep. And I think if we can hold that 6530, we'll go back to that 6605, and that might be the kind of choppy range for today. It is OPEX, so I kind of keep that in mind. I trade lighter on OPEX just as a rule. But if we can break the 6530, I think 6485 is definitely in play.
And that's 65. Okay, so 6530 is a little bit above 6500. Yeah, 65. Okay. So, and Chewy runs the E-mini scalping room. 6530 on ES, you're saying?
On ES,
Someone's asking? Which would be 6510-ish, near the 6500 round number. And since that's where our brains are right now, so that 6530 level that he's talking about is roughly 20 points higher. So that would be basically here. Basically here a little bit higher, but would be somewhere in this zone right here.
And I kind of like to give you guys like a big crazy lottery in case we do move in that general direction. I would say a strong bottom would be at around 6460.
60. Okay, thanks.
I put it out there yesterday. We were able to catch.
We're looking forward to that.
Yeah. I like to put it in the cards. Yesterday we were right. We caught over 400, so it was a fun move on the NQ.
Yeah. The scalpers did great yesterday. And speaking of scalpers, and I mentioned the special yesterday. I think we've got the how do I want to put it? The offer set up in a way where it works. I guess we just have to look it over one last time to make sure that what you see is what we mean, is what you get, and that it's not unclear, because just the way that WHOP sets it up, it has one pricing and other pricing, and for me, it's a total pain in the ass to figure out how to do it. Chewy knows how to at least navigate that, and so we're just trying to make sure that it's presented properly and accurately. And he thinks he has it right, but I haven't looked at it yet. Do you have it right?
Yeah, I mean, I have it as right as Whoop will allow, I think.
Okay.
So
And
so
what?
basically,
Go
it
ahead.
says, guys, that it's like an annual subscription, but it allows you to break it down into monthly payments. So you basically get to pay the annual fee on a monthly basis, or split into a monthly plan. So you still get the promotion, but you don't have to cough up the big payment right at the beginning.
Right. So don't get sticker shock if you see a big number. Go, wait, I thought it was $50 a month or whatever it is, and then you see that some big number. So, and we're trying to make that clear and to kind of tweak that. And he thinks he made it clear. I haven't looked at it yet, but I trust him. Trust but verify. I trust him. And so that's where we are. Just for fun, let's take a look over here. Don't even get me started on VIX. We'll go there in a second. Let's take a look here in depth view, where we could see the numbers and see what we're dealing with. So this 6,500, 6,475, this is in the AM expiry. This goes bye-bye at 9:30. The 6,550 magnet market maker short also goes bye-bye. So all this stuff goes bye-bye after the open. And so then excuse me, all this stuff goes bye-bye. My bad. All this stuff goes bye-bye after the open. And, oh, good. And we're left with 6,500 support, 6,475 support. We're left with 6,550 either magnet down, or if we stay above it, we get nice decay from there, sending us up. Now, if we look at between 6,550 and all the way up to 6,600, you see red. That's market maker short gamma. That's accelerated moves in both directions. That's anything can happenville. So you know, mentally you can think of 6,550 to 6,600, a nice 50-point range where anything can happen. And then above, you know, we see the numbers are relatively small. 66.25, 66.40, you know, kind of reference points, et cetera, on out there. And then I'm not going to go into the rest of the month that much, other than to say we still have JP Morgan calls lurking at 67.55, and we have a little magnet up to 67.50. Of course, we have to get through some of these round numbers here. We have a whole big reset after today, and it's just, you know, visibility is low. Sometimes when you're driving, visibility is clear. It's a nice clear day. Right now, visibility is low. And I'll do the best I can to provide a roadmap with what little markers there are along the way. Hopefully the markers will clear up. Speaking of volatility, you mentioned volatility. Yes, I did. Speaking of volatility, let me find it. And there's a lot going on in the volatility space. Oh, one last word about JP Morgan. I try not to be an a-hole technical term on Twitter. I try to kind of leave people to say what they say, mildly disagree or make a point in a very way. Like, I don't know how many of you watch the show Columbo, where Columbo would say, just one thing, ma'am. You said that your husband did this, but whatever. I just kind of ask that leading question. I try to do that or not say anything. But some guy apparently has a lot of followers, posted something from Cheddar Flow of 6,900 strike SPX puts being bought or something for the end of December, and said that was a JP Morgan adjusting their collar. That is so not true that staggers the imagination that somebody that has two followers would say that. So I guess kind of pointed it out, gently. Um, so I'm saying that to say this: be careful what you see on Twitter, including me if you want. Really take it with a grain of salt, especially that cheddar flow, black box, unusual activity. When these big institution trades come in, at these big round numbers for monthlies and whatever, you don't know if they're buy or sell. Those prices are pre-negotiated. The buy or sell is based on at the bid before, uh, at bid, lower than bid, above bid, and that's retrospective. They print that based on what was the last bar, not what or the last volatility reading, not what's going on at the time of the trade. So we just don't know. The bigger the lots, the less we know. Even though you would think the bigger the lots, the more we know. That's not true. And so just, buyer beware or grain of salt on that. Okay, off my soapbox. We don't want to see volatility here, in case you didn't know. 25. And so into the obscure babble space, um, we have two things going on in the VIX complex broadly. We have a lot of things, but I'm just going to focus on two of them because we're running out of time already. We have VIX leveraged ETNs. What does that mean? VXS, UVXY, whatever, and other products that have to that the hedging involved, and not just the hedging, their own rebalancing of their ETF is going to result in buying and selling VIX futures at different levels, which ends up being quote unquote Vega to buy or Vega to sell. Vega to buy, i.e., buy volatility, i.e., buy puts or buy VIX or whatever it is, i.e., no bueno. And so over 25 is where it starts being billions of dollars worth. We don't want to see that. We saw that yesterday. Big drop. Part of the drop into the close was related to that. Along with that, we have market makers hedging their VIX exposure, and we have pretty much a ladder between 20 and 25, where we have those accelerated moves in both directions. Market makers are short in there with some inflection points. And so we could get, with 22-ish being kind of a mid area, gratefully enough. So you can kind of like mark your mental calendars. And we've kind of been acting that way along with that. So those are the two factors. Leverage ETFs. Leverage ETFs, like I mentioned before, TQQ, SPXL, NVDY, whatever, and not NVDY, NVD, whatever it is, the ones that give you 2x and 3x. At the end of the day, they have to rebalance buying or selling to make the numbers add up, for lack of a better word, for the end of the day. And that added to the selling yesterday could add to the buying today. We have a pretty big 3-point space between the 25 and the 22, the VIX and the VIX futures contract. Even though we're talking December, that's pretty big. VIX should, quote unquote, come down towards this somewhat. Should be 2 points, 1.5, whatever. That gets a little bit big. I'm not a VIXologist, but I play one on TV. The VIX 9-day is kind of elevated as well. And so this looks like it's hedging across the board, short term and long term. VVIX is kind of going nuts as well. So the whole volatility space is screaming stress. I don't have a chart up here, but I was looking. Somebody asked about Binkus. I was looking with Binkus yesterday at the. That's my brother. I was looking with Binkus yesterday. He might have tweeted it. The VIX rate of change. And if you look at the rate of change of VIX, the rate of change is kind of off the charts ish. If we were talking about RSI, it'd be like RSI, 95, whatever, like screaming. Now, we did get this level of screaming worse when we got it August last year during the JPY sell off, the Japan carry trade sell off. We got it during recently during Liberation Day. So it can get worse, but the VIX rate of change is kind of getting nuts. VIX is getting stretched. So we're waiting for the when, not if, VIX calms down to at least 20. Give us a break. How about 20? How about 18, which is where a lot of algos are targeting, VIX, buying VIX puts down into December at 18. So let's see when that happens. One more fly in the ointment is we have the FOMC in the beginning of December. So vol should stay bid, unfortunately, through there to some extent. We have non-farm payrolls pushed out to after the FOMC. So they're going in there with the data vacuum, and so we could have even more vol into December, uncharacteristically. We have the Santa Claus rally scheduled, and Black Friday, Thanksgiving tends to be a kickoff of when we start that move in thin liquidity, light trading next week, historically, and that's where we are today. I wish I could paint a better picture, but I have to paint my masterpiece with the colors I have on the canvas. Any final words of wisdom?
It's OPEX. So again, my rule is just basically size down or not trade. I think there's just a lot to digest. Be patient, wait a little bit, and don't stick to your guns. I think that's a suggestion for today. Be able to flip your bias.
Right. Wear your opinions like a garment loosely. Get ready to shed them at any moment.
Exactly.
Oh, and thanks for that. Vols ripped that guy that I was talking about. So I have to admit, I'll admit it here. When I saw that, I said what I said, and I tagged Vol Signals into it, knowing that expecting that he would do exactly that. And I know he kind of is a little less reticent than I am sometimes. And he also speaks with a lot more authority. He's a market maker. He did this shit for a living. And one of the guys on his Discord now actually handled the JP Morgan collar, a chunk of it, as part of his book of business. So, he has a guy there that market made JP Morgan collar. So I think that, based on credibility and experience, I'm going to go with them. And plus, based on just read the prospectus. It's not opaque. It's everybody knows. There's no big secrets there. But anyway. Yep, right.
Good luck,
So
everybody.
right. Okay, good luck.